I will never forget your words there. Would you still characterize the housing market that way at this moment?
It might be more Bulgarian than Soviet. I forgot that I said that myself, but it has gotten worse. I think it's a 30-point drop in inventory. Not only is it the lowest level of inventory ever, it is the biggest drop ever in inventory. So once you start this cycle where people are scared to list their home because they're not going to be able to buy another place, it just perpetuates itself, and it's only gotten worse.
So why is the inventory low? Is it because people are scared? Is it because fewer people are moving? There was a lot of movement earlier in the pandemic. I feel like 3 people moved off my street. So what's happening?
Well, I think some of it is that we have doubled the rate at which people are buying second homes. So you have some people living in 2 homes instead of 1. You also just have really low interest rates. So when somebody contacts us about moving up, instead of putting their old place on the market, they decide to have someone else pay their mortgage. If you can rent the place out and keep that 2.5% or 3% mortgage forever, you will. And then some of it is that America just hasn't been as aggressive about building housing as it once did. There isn't a political consensus around it. It is hard to get the permits. The builders haven't always had the confidence, although now they're going crazy trying to catch up to demand. So we just have a lot of chickens coming home to roost where we should have been building a long time ago. And now that everybody wants to move, we're just trying to catch up.
Prices are also rising. Do you expect them to continue to rise through the end of the year? Like if you're looking now and you're having a hard time, should you be holding out for the fall, or is it only going to get worse?
I don't think prices will rise at the same rate. So it's a 20% year-on-year gain for the month of March, and that is a record gain. Most houses are now selling for above the asking price, which has never happened before. So I don't think that can continue. And what we've seen over the past few weeks is that some buyers are stepping back from these prices, but we still have so much more demand than supply that we are going to be supply constrained regardless. Lots of people are touring homes. They're just worried about being able to win the bid. And then even when they do win the bid, they're worried that their loan won't go through because the appraisal is going to come in so much lower than what they offered to pay. So I think you are going to see just a little bit of air come out of the balloon. It's not that prices are going to fall. They're just not going to rise quite as much. The only factor that's driving this is that if you are leaving San Francisco for Boise, Idaho, it doesn't matter if the price is double or triple. It still feels like you're paying a monopoly money because people are paying less for the home in Ohio, in Nevada, in Idaho than they were in California or New York. And that's why prices have been able to rise so much, because so much of this is driven by migration.
Meantime, you have companies redefining their policies about whether to come in or not. Google was going to take a stricter stance and wanted everyone back to the office. Now they're saying a large number of people can work from home forever if they want. Coinbase is selling its San Francisco headquarters. They're all remote forever. How do you expect these dynamics to impact the market over the next several years as these policies work themselves out?
Yeah, well, what we've seen in our own data is that about 4 out of 10 Americans who were using our website thought they'd be able to move away from the office at the beginning of the pandemic. And now, even as the pandemic eases, it's 6 out of 10. So fewer and fewer offices are able to hold the line. Even when you see a company like Google try to get people back, they've invested so much in their office, but people don't want to come back. And so that is just going to liberate more Americans to live where they want, to pursue more affordable housing, to be able to get a larger lot and a better life. And what we found is unprecedented rates of happiness. Usually when people move, they're moving up and they have less disposable income. But our survey data shows that now when people move, they actually have more disposable income. They're getting a bigger house for less money than they would have paid in California or New York or some other coastal city. They're moving to a lower tax place. And so they get this better life and they have more disposable income. Sometimes it means that 2 parents were working and now only 1 parent has to work. It's really been kind of like discovering plutonium for some families. And that's not the usual hangover we see. Usually when people bid crazy in a bidding war, they really wake up the next morning with quite a hangover, wondering what they've done. But people now are just very happy after they've made that move. And so that's why I think this trend is only going to continue for years to come, not just for months.
Redfin shares down quite sharply on the back of your results. A wider loss than, yeah.
Oh, man,
wider
you gotta
loss
ask me
than
this
some
every
had
time.
expected. I have to ask you, what's your response? What do you want to say to investors right now?
What I said in the earnings call, we nearly tripled our market share gains. We've tripled the rate at which we're able to get people into homes fast, which is the fundamental measure of how you compete. The business is in a better competitive position than it ever has been. The stock is up 5x over the past year. I just can't be worried that it went down one day. And it's always the day that I go on your show, but it'll be up again next week or next month because we're building an incredible company for the long term. And I know you think that I'm just saying this, but I don't have to say it. I want to say it. And I believe it all the way down. That's my answer.